In this video, we are going to talk about the business of wine. So before starting this video, like this video and subscribe to our YouTube channel for future updates. Although it may sound romantic to own a vineyard, establishing a company in any field is hard. And the wine business is a difficult one to get started in. If you want to take on the task of figuring out how to start a winery, you need to be driven, courageous, and enthusiastic about your trade. Those that are unfazed by the difficulties that come with owning a vineyard will need more than just resolve to get their businesses off the ground. They will also need some statistics. How do you get started with a winery? The establishment of a winery will need quite a bit of your time, but if you follow these steps, you will have a solid foundation upon which to build. Number 5. Create a name and choose a company entity. You need to have a name for your wine company and a business entity in mind before you get too far into the process of starting your own winery or wine business. You need to check to see whether the name you want to give your vineyard is already in use by another winery and that it is still available before you forward with naming your business. Because a name can go a long way with branding to make your wine stand out and be memorable. This will be of the utmost importance when it comes to actually selling your wine as well. This is due to the fact that a name can go a long way with branding. You may do a search online to see whether the name you want for your company is available. And if it is, you can probably reserve it there as well. Check with the Office of the Secretary of State in the state in which you reside. It is important to keep in mind that you also want the domain name for the name you pick to be accessible so that you may establish a website and other online marketing tools such as an Instagram account. Your new venture in the wine industry will also need that you choose a suitable legal structure for the company. There is a wide variety of entities from which to choose. However, if you want the best of both worlds, you should consider forming a limited liability company. This type of entity provides you with certain safeguards that an individual might not be entitled to, while also giving you the option of being taxed as either a sole proprietor or a corporation. Number 4. Write a business plan. Because of the stringent regulations that are placed on the winemaking industry, acquiring the necessary licenses and permits can be a challenging process. The process can be so challenging, in fact, that there are companies whose sole purpose is to assist winemakers in navigating both state and federal wine regulations. In order to legally run your vineyard, you will first be required to submit an application and get a permission. However, the requirements do not end there. You will also be required to register your company with the Food and Drug Administration, FDA. Comply with all applicable local, state, and federal regulations. And even get the Alcohol and Tobacco Tax and Trade Bureau's approval for your wine labels. When you add in the fact that certain states have their own regulations regarding direct shipping, the situation becomes much more complicated if you sell across state lines. After you have dealt with the administrative aspects of acquiring the necessary licenses and permits, the next item on your to-do list will be to keep track of the excise and sales taxes that are levied on wine in your state. We recommend that you speak with a lawyer that has prior experience and knowledge working in the vineyard industry if you are uneasy about maintaining the order of all of this information. Number 3. Navigate licensing, permits and taxes. When you are preparing your business plan, you should make sure to incorporate a substantial amount of research into the market and the competitors. You should be sure to include a synopsis of the business as a starting point, followed by an overview of the firm, a market study, specifications on the product you want to sell, financial predictions, and other information. You have the option of using a business plan template or developing your own plan from scratch. In any case, it need to be all-encompassing and include a significant amount of investigation. It is also not a document that should be left unchanged, rather, it should be updated as your firm expands and its objectives shift. Consider this situation from the point of view of a prospective investor. If you were considering making an investment in a firm, what kinds of details would you like to have presented to you? Number 2. Create a budget. Once you have your company plan and know what licenses and permits you'll need and how much they'll likely cost, you can construct A business budget that accounts for all of those expenses. Being all in typically comes at a high cost. After acquiring 460 acres in California's Santa Barbara County about 20 years ago, William Foley, the creator of Foley Wine Group, says it didn't take long for him to end up investing $15 million. Since then, vineyard values have only risen, particularly in land-scarce places like as Napa Valley. Vineyards in Northern California may cost between $11,000 and $30,000 per acre. But the price is expected to rise to $1 million per acre over the next 30 years. You don't have to be in California to establish a winery. There are vineyards in all 50 states, and property costs are undoubtedly cheaper outside of California. If you have the room and site quality, you can even establish a very tiny winery in your own backyard, which drastically reduces real estate expenditures. In such situation, the cost of constructing your vineyard will range between $35,000 and $45,000 per acre. Following the purchase or development of your piece of land, you must consider the yearly setup fees required to keep those vines alive, which may range from $15,000 to $20,000 per acre in the first 3 years. Remember that you still don't have any grapes to produce wine with at this stage. Following that, vineyard owners must spend in machinery and equipment, which is not inexpensive. Finally, most vineyard owners desire to develop a production plant and tasting room, since your tasting room will generate 90% of your earnings. With all of these expenses, we suggest creating a business bank account to keep your company and personal funds distinct. Number 1. Get funding for your wine business. Most ambitious vintners, particularly those learning how to establish a winery, won't be able to come up with $1.5 million on their own, so they'll need to seek outside funding. As with any startup, the newest vineyards may have difficulty obtaining debt-based small business loans. Thus, early funding will most likely come from a mix of equity financing, loans from friends and family, and bootstrapping. Also, regardless of the sort of loan you ask for, having a high personal credit score, profitability, time and company, and solid cash flow will give you the highest odds of approval. Thus, the optimum time to apply for a loan will most likely be after your busiest season. Loan from a bank. Because the wine industry is inherently hazardous, vineyards may have difficulty obtaining a bank loan, as is any industry subject to the potentially destructive whims of nature. To safeguard their interests, banks may demand a high down payment, possibly up to 50% of the loan amount if they accept a vintner's loan application. If you're determined to get a bank loan, you could have more success with a local bank or credit union rather than a huge national branch. Even so, be prepared to make a substantial down payment and pay a higher interest rate than typical. You may also anticipate a vineyard evaluation. Because of the industry risk, prospective lenders will be adamant that the borrower is financially stable enough to repay her loan, even if her wine company fails. As a result, lenders will extensively examine the borrower's personal salary and credit score, in addition to the business's financials and predicted revenue. Loan of equipment. Because equipment is your biggest upfront investment, checking into an equipment loan is a no-brainer for winemakers. If accepted, your lender will advance you up to 100% of the cost of your equipment, which you will return over time, plus interest. Startups may find it simpler to qualify for equipment loans than for other forms of borrowing. Because the equipment serves as security, lenders consider the equipment's worth as well as your company's financial history. Business credit line. Vineyards, like any other agricultural company, may endure periodic peaks and troughs. A business line of credit is great for getting you through those hard patches, since you can use it whenever you need it and just pay interest on the amounts you use. And if you, like most vineyards, do not cultivate all of your own grapes, you may use your line of credit to purchase grape inventory to blend or add to what you do harvest. Credit card for business. Winemakers, like any other small company owner, use business credit cards to pay for many of their lesser costs, and they often carry a big load when they first start out. Choose a credit card with a lengthy 0% intro APR term that allows you to carry A balance interest-free for the duration of that introductory period to reduce your initial interest rates. What do you think about this video? Do let us know in the comments section below. If you enjoyed this video and want to hear from us again, be sure to hit that subscribe button before you go.